Hello everyone. So today I want to talk about the TGIF setup from ICT, which basically means thank God it's Friday. It's a setup that is only found on Friday, and I'm also going to combine it with the ICT silver bullet. So this setup basically will be analyzing the reversal pattern that happens on Friday. So for instance, we are looking at right now we are looking at a weekly time frame. So okay, let's do this. Okay, so now I want you all to ignore this candle. This candlestick was created today. So I want us to focus on this candlestick, this one, which started last week on Monday. This was the low, and then this was the high, and then this here was the close. So this was Friday's high, and then by the end of the week on Friday, by the end of the day, it closed over here. So what you basically do is we'll be looking to sell here anywhere around the top here as it goes down to reach at least 20 to 30% of this whole candlestick around this area. This is also applicable if the market was bearish. So you can only take this one and invert it. So basically here we are looking at Nasdaq. So, and also this setup is supposed to happen at an area of interest on a higher time frame. Like if you check here, there is this order block, and there's also this fair value gap here, which I've highlighted as an FVG. It will be much clearer on a daily time frame. Okay, so now let's go down to a daily time frame. Let's see what we have. Okay, now this is a daily time frame. Now from a daily time frame, now it's clear that this is the fair value gap that we were anticipating price to react on. There is this high of this candle and this low of this candle here. This distance in between, it's a fair value gap. So we were anticipating that price should cover at least more than half of this fair value gap for us to reconsider this fair value gap. Now this was the beginning of the week last week. So this was Monday, Tuesday, Wednesday, Thursday, and this is Friday. So we were basically going to sell over here and then take our profits around this area. So I am going to dial down to lower time frames, and I am going to show you where we're going to take our trade. So now let us take it down to lower time frames so that you can see. I basically like to call this one the top down analysis. So now let's dial down to a let's dial down to a 4-hour time frame. Okay, so now on a 4-hour time frame, so now I want you to look at these two lines. They represent that fair value gap on a daily time frame. So now what do we do? This was the start of the day, and then this was the end of the day. So ignore this candlestick there. These are for Monday today. So we just want to basically focus on this area. So now if you calculate the distance from down here to the top here, you realize that this let's just say this is 100%. and then from the top here down to around here where the market reversed, it's basically like 30%, if not more. You can calculate using your Fibonacci. Okay, so now let us move to an hourly time frame. Now, on an hourly time frame, there is the most famous setup that you all know, that we all know. Let me draw the setup. I am very sure you are familiar with this setup. This is the setup. So basically around here you'll be expecting, after the market has performed a break of structure here, you expect it to retrace to a equilibrium or a premium area where you are basically going to what? To sell it down all the way. So now we have done our we've come up with our higher time frame levels of interest. Now as we move down to lower time frames, basically for me this is what I look for. This is the structure that I look for on lower time frames at a higher time frame area of interest, be it a fair value gap or an order block. So now if you look at this structure, now you can see that here, now you can see for yourself that around here there is a break of structure around this area. After market took out this high here. So if you are someone who basically takes trade from an hourly time frame, you can utilize this structure. So now basically market is expected to sell, I don't know, anywhere from this area all the way down. This is what is expected. So now also if you sell from here, you put your stop loss at the top here. But basically for me, I always like to move on to a 5-minute time frame to look for a setup where it confirms this structure again. So now let's move down to a 5-minute time frame. You can also use a 15-minute time frame. So now moving down, now this is Monday, but we want to look at Friday, last Friday. Now you've analyzed, now we're looking for a trade setup, TGIF Friday. Now we utilize this. It's either you utilize the ICT silver bullet that happens basically between 9 to 10 a.m. New York time or 4 to 5 p.m. Zimbabwean time. So there was a trade around this area during New York Open, and then for the ICT silver bullet there was a trade around this area, which is basically between okay, let me do this. Let me highlight the areas for you. Okay, which is basically between 4 p.m. Zimbabwean time to 5 p.m. 5 p.m. Okay, so I want you to pay attention. I want you to pay close attention to this area in between these. So there was a setup around here during the ICT silver bullet, and also there was a setup just above here at New York Open. So but I want to personally focus on this area, the ICT silver bullet. You are going to take your trade around this area. So now let's look for that structure. Remember this structure. Remember this structure. Remember this structure. Okay, now this is the structure that we are looking for around this area. So if it's not clear here on an M5 time frame, we dial down to a 5-minute time frame or to other lower time frames. Is it a 1 minute or 3 minutes time frame? That's where we execute our trade, because we already have the bias that market is willing to go down. So your areas of interest to take profits are these lows, these internal liquidity. Now we should also understand that this whole thing is happening on a daily fair value gap, and on an H4 there is an order block. So all this is happening on a higher time frame area of interest. So this gives us the ability to trust our setup, right? So now let's move down to a 1 minute time frame and look for our sell model. Okay, now on a 1 minute time frame, on the 1st of September, now we are here. So I want you to check, this is the area that we are looking for, this one. So looking at this area, this setup also happened to take place on a fair value gap here. See, this is a fair value gap. So these things further strengthen our setup that is going down. You see, so we focus on this area. So this setup happened. So this setup happened during the ICT silver bullet. So there is this higher high, and then it came down to break this low here, and then price came back to this fair value gap over here. This is where you're going to take your sell. See this fair value gap. Over here. And then your area of interest to take profits was this low ultimately. So if you wanted, you were going to let it run down, but you should always take your partials and then let more profits run. So basically this is all about the ICTs. Thank God it's Friday, in combination with the ICTs silver bullet. Thank you. So for more information, if you have any questions, leave a comment below, and I am going to do more videos for you to show you whatever area that you want to learn, and criticize me where you can so that I can learn, guys. Thank you.